Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We are in a policy-driven market currently, and joining me to discuss is Carlson, founder and CEO of Financial Freedom Wealth Management Group, to discuss those potential outcomes of the U.S. election if investors are giving too much weight to the impact of presidents on companies. Julie, it's great to see you. Welcome to Trade Talks.
Yes, thanks for having me.
Do you think we're investing with too much emotion at this point? I mean, 2020 was a very different year for Americans politically, socially, medically. What are the three potential outcomes of the election?
Yeah, I think right now our emotions are heightened, and we're passionate, and we're going into this election with uncertainty. And so I think we see three potential outcomes here. We have a Trump gets reelected and most likely a split Congress. The second one would be the blue wave, which I think is priced into the markets already. And then third would be a Biden presidency with a split Congress, which is an option as well too. So I can,
go
ahead.
I'm sorry, go ahead.
Yeah, so if I want to kind of drill down a little bit in each of those, so under a Trump presidency with a split Congress, I think that that would create not as big of a stimulus, which I think is priced into these markets. And so given that, we may have to undo some of the recent rally, although that kind of happened last week as well. But under that, we'd have more of a positive for big tech, for growth. I think it's positive overall for the markets, and there'd be a lower risk of a shutdown moving forward. And then contrast that to a blue wave, I think that the more regulation comes in, we have it's more investing in infrastructure, bigger taxes for corporations, but also the biggest stimulus bill most likely would get passed, which short term is good for stocks, but over the long term, probably not so much. Inflation, rising taxes in the future. So we'll have to deal with those consequences, down the road.
And what happens if results are contested?
Oh boy, so that's probably, I think today, on election day here, the markets are up. We're like feeling relief that the day is finally here, but most likely it's looking more and more like it will get contested and we'll have an election month versus an election day. So I think that brings more volatility into these markets. It most likely will keep that stimulus off into the future, which is not good. And the unknowns of what, what's going to happen. So the markets don't like uncertainty.
Yeah, it is almost a sigh of relief to actually get to this day. And at least we know that one part is over with. I do agree with you there. But the two candidates have very divergent views on future taxes. You alluded to that before. So what is the mindset for investors with that backdrop? And what advice are you giving to clients?
Yeah, very polarizing views. But we also have to remember we're in a global pandemic. So I don't think that increasing taxes will be the first thing under a Biden presidency that happens. But what we're saying to investors, we're kind of in a wait and see pattern right now. Typically, we would be into that year-end planning for clients and looking at the, whether we should be doing Roth conversions, whether we should be doing capital gain harvesting or loss harvesting. And so right now we're kind of like, all right, let's see what happens here. But we're also being prepared. We're knowing what actions need to take in either direction. And that gives our clients confidence that, hey, we know which way we're going to go either direction. But it's just a matter of doing, making it happen after we know the results here.
So are there any discernible moves that they should postpone and some that they should not postpone?
I would say that I think taking capital gains makes sense, right? Right now, especially if you are a higher income earner. But typically we would do that offsetting losses. But so sometimes right now we're saying, let's wait on realizing those losses And then also for Roth conversions, like this year has been on the dips when the markets are down, are fantastic times to do Roth conversions to get that money when the markets are low into a tax-free bucket.
So any final thoughts here when you think about it at the end of the day from a longer term perspective? The data shows that it's worth it to stay invested instead of trying to time what's normal machinations in the market. Would you agree?
Absolutely. And that's our constantly we're sharing that with our clients and the investors out there, looking at buying on these dips when, like last week was a great opportunity. And also to keep in mind that we're not investing in the president, we're investing in publicly traded companies. So yes, the president has impact on policy and all of that, but we really have to disconnect our emotions and know that we're investing in these companies that are going to thrive moving forward. And when you're looking at your long-term investment and your long-term financial goals, it's important to stay diversified, have a wide exposure to asset classes, and stay the course, stay committed to your plan.
Excellent point, Julia. Thanks so much for joining us on Trade Talks.
Thank you.
You got it. And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.